after. Don't let them interrupt you. And we will have a recording after, so I'll send it to all the folks on the invite who weren't able to make it live. So thanks everyone for joining us. We're going to do about a 15-20 minute presentation here with Solution Financial. So we have Sean and Brian. Sean's the CFO, Brian's the CEO. So very excited to do this presentation, and then we'll leave our questions to the end, and we'll do about a 20-minute Q&A after the presentation. Awesome. Well, Sean, Brian, please take it away.
Yeah, let me jump in here. So today we're going to be marketing a convertible debenture offering. Solution Financial is a public company on the TSX Venture. We specialize in leasing luxury and ultra luxury vehicles to a particular market segment out there that isn't well serviced by the traditional Canadian banks or alternative lending groups. That's international students, new immigrants, and business owners. Before we get into kind of the details of this presentation and the specifics of this convertible debenture offering, we're going to actually present a quick video and then walk you through this investor deck. So let me just spin this over here.
Canada continues to be a very welcoming country for immigrants. Did you know that at least 1 in 5 Canadians are immigrants?
Sorry, Mark, you can't see the screen?
We can't see the video.
Oh, really?
Yeah.
That's very odd. Okay, well, that idea.
Send a link to them.
We'll send a link later, then that'll give us an extra 3 minutes. But this is a very succinct video that summarizes it. Okay, we should have tested that to see that people can actually see it. Okay, good. Okay, well, just going back to it. So Brian started Solution Financial back in 2004, and it's headquartered here in Western Canada in Richmond. If you've ever been to the Vancouver area, certainly the last 10 years, you'll see the phenomena of new drivers and learners driving around the Lower Mainland in these very nice luxury cars, in many cases, you know, high-end Porsches, Lamborghinis, Ferraris. And when I ran into Brian, I live in Richmond, how they can afford to do this suddenly became much more crystal clear. And so the idea here is that we specialize in leasing vehicles to this particular demographic of customers that have, in some cases, no credit history in Canada. They are coming to Canada or newly arrived in Canada, typically with a fair amount of wealth, but without the credit history in Canada, they're an unserviced market. So we have a very unique leasing structure that relies on the underlying value of the luxury car assets, and David a little bit of alluded to that in how we're able to preserve the value for the long-term duration of that vehicle. We don't do low-end stock cars. The cars that we specialize are mostly limited edition, and we specialize in certain brands like Porsche, Mercedes, and a luxury car or ultra luxury brands that maintain their value for a very, very long period of time. So that's the overview of the business. We are a picture of our teams there. Our leasing office in Richmond is there, but most of the business operations are through dealerships. And it's basically trading paper and buying the vehicles and then leasing it through to these customers. So our business model is quite simple at the end of the day. We went public for the purposes of making sure that we have sufficient equity capital in order to lease the vehicles. At the end of the day, we are entering into lease agreements with our clientele that are generating effectively 14.15% is our historical performance rate on our leasing portfolio. So we're buying the vehicles, leasing them over time. As Brian also said, the typical lease average lease term is about 28 months. But we do one other thing that's quite unique is we allow the customers to upgrade regularly. Most leasing and finance companies, you'd go in, you'd enter into, you know, a 36 or 48 month lease, and they don't want to see you until you have completed the lease agreement. We have a much more white glove service. Our relationships with the dealers, our dealers want to sell new cars all the time. And our clientele, they love driving new cars.
It's a rental.
It's a rental business. Exactly.
It's a rental business. It's beautiful.
Yeah.
I freaking love it.
Yeah, so that's exactly what we do. We proactively reach back out to our lessees when new cars are coming onto the market. And because we're agnostic to the dealership, so they're not, that's the other problem of leasing traditionally. If you go in and buy a Porsche, when you go back to renegotiate your lease, if you want to upgrade, guess what? Their in-house leasing program has a strong incentive for you to buy another Porsche. In our case, we allow the clientele to move. Well, maybe they want to get a Lamborghini this time or a Mercedes. So we have a very an interesting business model as it relates to this place. And definitely it's a rental business at the end of the day. And there's another very punitive issue in Canada here, which is related to our tax regime, like sales taxes. GST and British Columbia have very punitive provincial taxes as it relates to these luxury assets. So
is there a luxury tax for these?
Yeah, at the top end rate is 25%.
Of the stream of payments or the value of the vehicle?
Value of the vehicle. So the minute you go in and buy one of these ultra luxury cars and drive it off the lot, you're losing 25% of the value in sales taxes. So that's another reason, especially if you wanted to only own the car for 3 or 4 years or 2 years for that matter. So this becomes very attractive to folks who want to upgrade regularly, because alternatively on resale, you pay the sales tax again and again. And again. The other risk here is somebody leases the car from us and then ships it overseas or moves it out. So we put a GPS tracker into all the vehicles. We are very much focused on ensuring that the cars are properly insured, and that's kind of our white glove service, is making sure that the cars are maintained meticulously, because at the end of the lease, the other value here is quite often the clientele are moving to another vehicle. So we're making 3 to 9% profit margin on the resale of the vehicle as well. So again, David's comment is like, what's our secondary markets? That's absolutely are part of our value. The dealerships that we work with absolutely want to get these vehicles back because they tend to be very lightly used. We put mileage limitations on the vehicle usage, and the secondary markets for these often limited edition vehicles is extremely high. So that's the essence of the business model. Very profitable. I think we're going into our 8th consecutive quarter of profitability. We've been able to introduce a dividend, and now with that backing, we can offer convertible debentures. So this is a very, very attractive investment opportunity from my perspective as an investor and obviously a CFO in the company. So just now I'm going to accelerate through because there's just a lot of slides, but they're mostly visual. When we went public in 2018, we actually had a relatively nominal in-house portfolio. We were brokering most of our deals and giving up margin. So that's the purpose of going public and why we're continuously raising capital. In just under 2 years, we've been able to almost triple our in-house portfolio, and that's our long-term vision. We want to grow our in-house lease portfolio up into the $100 million category. In fact, if we had the capital over the last 4 years, we would already be there. We were doing north of $25 to $30 million a year in lease brokering before we went public, and we're continuing the growth despite COVID. So we'll get into that. Our portfolio at the end of our fiscal year, which we just wrapped up our audit yesterday, in fact, we had 334 vehicles. Many of the vehicles now are onto the 2nd generation lease. So our average lease price on the renewals is on the lower end. But all of our new vehicles are, typically well north of $150,000. The luxury and ultra luxury price points for these vehicles. So profitably, we have a team of, I guess we're up to 14, 15 people. We operate in 2 offices. One of our offices we own. So again, we have a very lean overhead infrastructure as a leasing company. Most of our sales are through our connected dealerships, and we have a unique operating structure. Most of the traditional bank lending is through a system called DealerTrack. We have our own proprietary leasing system that allows the dealers. DealerTrack, if you're familiar with the leasing business, is a bit of a pain in the butt. It's a point of sale system that allows the dealer at Porsche to entertain a sale to a customer and then put the information into DealerTrack, which goes out to all the alternative leasing companies to quote on that business. Instead, we have a proprietary system that shortcuts that interface time with the clients at the dealers to be able to turn around lease quotes extremely quickly. And that's, at the end of the day, a part of the value proposition to our dealers, is that when they see a customer wants to get their hands on one of these ultra luxury vehicles, they do not want to wait around for very long. They want to do the deal quickly, and we've expedite that process. So operationally, as you can see, we've been able to keep our operating costs relatively stable, as you would imagine, and it's really a growth of our portfolio story, and we continue to see ever increasing profitability as we increase our lease portfolio. Here's just a very quick timeline, and I'll get to the point at the end here on adding John Gowans and Randy Smith, who just joined as our chairman of the board. And I'll leave that for the end, but we're really at this point in full expansion mode into Ontario, and that's one of the main drivers of raising the capital at this time, is expanding into Toronto, which is frankly Canada's largest market for exactly what we're offering. It's just a high-level SWOT analysis, and it really recaptures what I think I've mostly talked about, but I will speak briefly to the social and political environment. Going into, I think, the Trump era, our Solution Financial was growing at a 18% annual growth rate. It has slowed thanks to Huawei, the issues with China and Canada. Obviously, a big proportion of our clientele are immigrants from China and international students in particular. So we're a little bit thankful, folks from, our friends south of the border here, we're a little bit happy that maybe there's a change of face there. The political turmoil globally will come down, and we hope to, revisit the growth rates that we saw before. In the meantime, though, we have untapped markets in Canada, particularly Ontario, as we expand here. And despite the political tension, despite COVID, we have sustained, $1 million to $3 million a month in new lease originations and sales volumes. So we really have proven that given the demographic of the clientele that we serve, that this is truly very resistant to a recession. Most of our clientele, despite not having credit history, have a ton of wealth. We have examples of international students that have, a $20,000 monthly allowance from mom and dad. So it is really a unique niche that we're targeting. And let me move on to just the size of this niche is really not so small. I'll get back to that point. But the international and new immigrant market in Canada is huge. It's actually huge in the United States as well. Before I get to that point, though, but let me really further emphasize some of how we differentiate ourselves from the other competitors out there. I kind of already mentioned the flexibility of our lease term. I think that's a little bit obvious at this stage that I've explained it. This ability to be agnostic to the dealership, to be able to share the end of, so if a customer looks after the vehicle, there's a lot of equity at the end of the lease term. We can move these vehicles around easily and preserve the relationship with the customer and sell more vehicles at the dealer end. The GPS. There's another really peculiar rule I'll emphasize on this slide and this is the existence of the 7-year rule with the Canadian banking system, and it probably exists in the United States as well. It's this notion that the banks will not finance a lease agreement where you enter into a lease agreement that exceeds 7 years. This is a long-standing rule that's bizarre that says there's really very little equity in a vehicle after 7 years. That is absolutely untrue now, and especially in this ultra and luxury vehicle. In some circumstances, the vehicles get appreciate because they're very limited edition, and these aren't Toyota or Hondas where people are driving them into the ground. These are vehicles that people are tending to baby, really look after them. It's more about the posh lifestyle and cultural experience of owning these vehicles. So our target niche product and our clientele really preserve the value and allow us to overlook some of these ridiculous banking rules that are impacting many of our competitors. So, you know, kind of moving quickly through here, I've already mentioned these target markets. I will speak to the international students. Many of these young kids are coming to Canada. They might be here for 4 years. They come from wealthy families typically. And while they're here, they're like, enjoy Western culture. And a part of the perceived value coming from Asia is enjoying beautiful homes, beautiful cars, and they're taking advantage of this opportunity. Buying these vehicles back in China, I kid you not, the costs are twice the price they are in North America. So despite how we perceive these values being extremely expensive, they're relatively inexpensive. And when you can lease them and hand them off at the end of your, you know, when you're heading back home without any headache, that's a part of the big value. The other one is new immigrants. They like, most of them are coming here with a lot of wealth themselves and they want to enjoy that while they're here. The other big segment being business owners. There's the tax reasons I explained at the front end, and to be able to structure leases that take advantage of the deductibility of the lease rental rate while you're enjoying a beautiful vehicle is of course really important. How's our timing?
We're 15 minutes.
We're getting out to 15 minutes. Okay.
We're fine.
So yeah, here's the two markets that we're, we built the business around British Columbia at the beginning of 2020, I guess the tail end of 2019, we moved into Alberta and expanded that. In Canada, Ontario is the biggest market for international students. And our business model is quite simple. Where are all these new immigrants and international students going to school or living? And what's the closest proximity to a Porsche dealership and a Mercedes dealership? That's exactly where we set up shop. We've just been licensed in Ontario. We're setting up near Markham, close proximity to the University of Toronto, York University, huge hubs for exactly our target niche market. And we're very enthusiastic and literally being drawn in by some of the dealership relationships that we have in Ontario, because we recognize it as being an underserved market for the particular offering that we have. Here's more numbers on this. These are important statistics from us. You know, despite COVID and the reduction, and there has been a significant reduction in international student enrollment, but the Canadian government and the Canadian university systems have made huge investments in bringing these students in internationally. We definitely see an uptick, and the fact that we have sustained the level of business that we have is a strong indication that we can weather the storm, and really it can only improve as we see things return to normal and get a vaccine rolled out globally here. Our growth and exit strategy here. So, we're raising a convertible debenture. So at the end of the day, we want everyone to see the upside potential of what our strategy is and owning stock in this company. So really, we went public with the goal of building this up to a much larger business, getting on the radar of the bigger banks that are in this alternative lending space. And there has been historical acquisitions, both in Canada and south of the border, like Carfinco's acquisition by Santander. So the metrics here are quite easy to understand and to see how the value can increase. So that's the strategy. Let's get this up to $100 million portfolio, and that's how we brought in some advisors and added to our board of directors with folks who have contacts with the people with an additional capital to potentially take solution out and bring it to the next level, nationally, if not across North America. Here's our financial information. It's a very, very closely held company. We went public. We had probably, 25 presidents list participants. Almost all of our board of directors and management team are own stock in the company. It is relatively thinly traded, and a part of our capital raise is to do a prospectus financing. We're working on that right now because this story is not really a venture story. We are a profitable, revenue generating company, dividend paying company, and we do expect to increase the volume of trading transaction as we continue to market the story. So long story short is there's a ton of value in the company's stock and its history. This particular offering, we're offering a 5% semi-annual cash interest rate convertible debenture. It's converting at 50 cents a share, which is really attractive. I think the stock's trading at 45 cents a share right now. We went public at 25. We've actually traded north of 50 cents. So that conversion feature is really, really attractive from my perspective. We're actually renewing and have 100% participation on the renewals. And so this is just before we offer the convertible or the equity offering that we're planning. We're putting this convertible debenture offering out there. It will mature for cash in 2 years. We just finished the first 2 years, so we're full renewal, and we've got 2.75 committed, so there's still 2.25 remaining, and we are looking to close this relatively quickly while we're getting connected with Industrial Alliances, our investment banking partners, on our equity raise. Here's our historical stock price. So we went public at 25 cents, and it's performed very well. Even being north of 50 cents. It's not a stock that will double or anything like that. That's what I'm saying. It's not really a venture story, but it's a really nice, relatively low risk, growth-oriented investment. A part of our strategy is, in fact, to get out off the venture exchange, move up to the big board, where we'll be, many of the investment banking and larger pension funds who would look at this and go, yeah, this is a really good, safe rate of return for my portfolio. That's who we need to get on the radar long term. And they can't even play in the venture market, which is more designed for cannabis and psychedelics and blockchain. So we're really not in the risk profile of many venture companies. So I'm almost finished here. A part of our growth and strategy here is we brought John Gowans and most recently Randy Smith. Randy Smith is the CEO of Geminis M&A and Arundel Capital. His company controls 6 or 7 different leasing companies across many industry sectors. I think 6 industry sectors, big in oil and gas. They do play in the auto sector as well. His collective portfolio, I think, is over $260 million in assets under management. And he's a part of our value of growing our story nationally, helping raise capital, introducing syndication, securitization potentially to really accelerate our leverage to our equity holders, and very much a part of our next growth strategy for the business. Unfortunately, you couldn't be on this call. He's wrapping up. He's coming back into Canada, I think, on Sunday. So next time we pitch, he probably will be involved. Operationally, that's Brian, myself, and Vincent, who runs the operations. We spoke to this already. Our other independent directors, Desmond Balakrishnan, Carrie Meyer, who owned Meyer Insurance here on the west in Western Canada. I think most of the folks here in Vancouver would recognize Meyer Insurance. And another one of our big investors, John Gowans, was at First West and built, you know, $150 million portfolios with First West Leasing and WS Leasing in his career, and have certainly been really instrumental in kind of our expansion plans. That's it for us. Here's a summary of our contact information and our kind of, you know, our information about the company. But I'll hand it over to Brian to probably field most of the questions. But you know, thank you very much for your time.
Awesome.
It was excellent. I've got a couple of questions. I've been in the leasing industry and the commercial finance industry for the last 32 years. And I know Randy Smith quite well. And you guys have got a really good thing going on here. You know, I mean, very, very niche market is, you know, the right word for sure. And, you know, you've broken the rules, and I like to see that, because, you know, most of the traditional leasing companies that I've grown up with, and you know, Mercado and WS and Coast Capital, and I mean, they all fit into that same pigeonhole, right? I mean, because they're not in this market. They're just not in this market sector that you guys are in. Dave, where I'm going with this, and you know, to me, you guys need a hell of a lot more than $5 million. And,
Yeah.
And I'm thinking, between Dave and I, we may have some real solutions for you guys, but we're not talking $5 million. You know, what could you guys do with $50 million?
We could get to 90 million portfolio. No, Lyle, you're bang on. The issue is incrementally raising capital and or ultimately running into the right partners on the equity or debt side that see the vision for the long term. Yeah, no, you're bang on. Yeah. And you know, a part of this exercise is getting the story out and ultimately running into the right person. So yeah, because Randy literally just joined us and saw the same vision, right? There's big opportunity here.
One thing Dave and I absolutely despise, and I've been at this for a long time, 32 years. I hate raising capital. I am not interested in the slightest, interested in raising capital. I hate it. It's tedious. It's not me. Now, there's some guys that are absolutely brilliant at it. I'm not one of them. And
they can have it.
Right. We believe that we may have a solution because of your profitability, because of your vision, and because you've got dollars. You know, I mean, Dave and I, you know, we partnered up a couple of years ago, and it's so refreshing to see that we're talking to somebody that actually has a balance sheet. You know, I mean, it's always so refreshing to see that you're making money, you're profitable, and you've got direction, right? I mean, let's be realistic, guys. You know, the space we all play in really isn't all that big. It's a small circle. And we've all looked at the companies that we see on a daily basis, and we all say the same prayer. You know, Lord, send me a deal that we can actually underwrite, you know, and you guys are it. But, you know, I wouldn't even entertain $5 million. You know, I would be pegging you guys at anywhere from 50 to $100 million is what you guys need to do what you need to do. And what Dave and I may be able to present to you, it'll blow you away.
Well, we're absolutely enthusiastic to explore this further. I will throw in a little bit of the uniqueness of us. We don't get quite the subprime rates of the Access Financials and the other alternative leasing groups out there because we're not running repo business, right?
No.
Like you wait till you see our stats on our repos and defaults. Like they're non-existent. Our
They don't
client
exist. Yeah,
That's what I was just
there's
gonna
no bad
ask.
debt.
But at the same time, the clients, like we hit 14.15 and it may even be like come down a little bit. Our clients are rich, but they're not stupid, right? So we can only charge a premium to a degree. And that does start to get into making the numbers a little bit tricky as it relates to securitization. We have a phenomenal lease line that's prime plus 1.25%. Like it is.
And if I can ask Brian, where's that coming from?
Canadian Western Bank.
That's what I thought.
Yeah. So yeah, it is, and that's relationships really good, but they have strong covenants. Right?
Big time.
A 40% lend line that allows us to borrow up to 40% of our portfolio.
Yeah.
So yeah, no, fantastic to entertain these conversations. We're definitely seeing the same vision as what you've picked up on. The issue is how do we get there, right?
Yeah.
And you're right, it's a small niche of people who really understand this leasing market. Keen to get you chatting with Randy for sure when he's back from his holidays. But
And you really, guys, you haven't really tapped into the big markets.
no, well, I mean, BC has been phenomenal just because it's really good for our niche. Right?
No, I'm saying, but this model is
Oh, yeah.
done universally. I mean, there's Miami, there's LA, there's there's Texas, there's Atlanta, Georgia. I mean, it's New York. I mean,
It's endless.
yeah,
Yeah.
it really is. I mean, and would you? I mean, if you had, a blank check, would you do more brick and mortar? I mean, what have you thought down the path that far?
Yeah, no, even from the day I first got involved with Brian, we were looking into the US, and it is that as simple as where are all these kids or these, new immigrants that fit this demographic locating? Because they have a slightly different approach. Like they don't look at a car, these luxury cars, as a means to get from A to B. It's more of a lifestyle. And I think that's, and so this niche isn't such a niche, but our business model is very,
The model is.
the model is, and it keeps all the metrics in alignment and ensures profitability. And
As I say, it creates what everybody wants in business: predictability.
yeah, absolutely.
Yeah.
And the fact that we've weathered what has to be the craziest 4 years of predictability in our space is a strong testament to its long-term viability. I don't know that you guys would be familiar, but Canada was really bumping heads with China with the Huawei thing, and hopefully everything calms down. But going into when we went public, I was like, this is the most, and I still obviously very bullish that this is just a phenomenal business model, and it should come to like Western culture too. It's like reinvented. How do you get into most of us think about buying a high-end Porsche only once I've hit the lottery, right? Or really almost into retirement. But this rental model with the ability to drop the keys off, it opens up a completely different perspective
It's the SaaS model of cars.
Yeah, exactly. In fact,
It's a car. I mean, it's really, that's what it is. It's a usage model.
Mark wrote a blog post called "Luxury as a Service," and that was exactly this story.
Yeah, that's exactly the story. Yeah. I mean, that's where everything, I mean, coming from the tech world, people don't want to own the asset. They want to use the asset.
Yep, they want to, and if things go wrong, they want to be able to
I'm done.
turn off the subscription, right?
Drop the mic. Right. They want to drop the mic, right?
Yeah, you got it.
Interesting. Yeah, I mean, we have a model that is could be very, very liberating for, you know, the vision that you have, and really, you know, creating this model that starts with the financial resources to see it to come to fruition. And I mean, yeah, the 5 million, that's just, it goes to another round, another set of fees, additional then you go get the next one. There's additional cost. I mean, when you start looking at what you really spend to get to where you want to go, it's extremely expensive. We believe our model makes economic sense as it relates to finding a pathway to get there, you know, and having, again, a predictable cost of dollars that are very, very, very fair, and, you know, I would say very equitable cost of dollars. I mean, we're talking, you know, in the fives.
Wow. Okay. Well, definitely let's take it offline and have a conversation, because we're there with you in terms of that's the faster, easier approach here. In the meantime, we're doing, you know, we've just generated some good success, so we're kind of moving it incrementally in the right direction. So, but happy to accelerate things, of course.
Perfect. I'm good. You know, Mark, I'd just like to schedule a time with Lyle and I to you know, the sooner the better.
Yeah, we'll let's all connect. David, I'll connect you to Sean just via email, you and Lyle, and then we can just schedule a time to chat in the next, like,
Early next
maybe
week.
even, like, you know, later today or tomorrow. Right?
Yeah.
It would be best to get Randy on the call too.
Yeah, so maybe next week then, Monday, right?
Yeah, on Monday, Tuesday.
That'd be fine.
Yeah, awesome.
That'd be fine.
Did anyone else have any questions on the call? I know there's, or I mean,
Why? Do I have any questions that we said?
yeah, if you have any other questions, or does anyone else on the call have any questions?
Well, I got just a couple of questions, Brian, and the rest of the guys there. I'm a little fuzzy on the dealership side of things. Maybe just explain how the dealership side works. Because obviously you guys aren't going and purchasing these vehicles, whatever they are, from a Lamborghini to a Mercedes to a, pick one. They're not sitting on your lot. Am I correct?
Correct. So if a student walks into a Porsche dealership and wanted to get the $100,000 Cayenne,
yeah,
and the dealership, knowing that the student's not going to qualify for any lending lease terms or the in-house, so they will contact us.
Got
and
it.
then, because we know how they are, we can generate the lease quote to the dealership in less than 15 minutes.
Right.
Even
Got
10
it.
minutes. And what they do is the dealer will present that quote to the student, and the student is going to get the down payment that we require. They can roll the car in the same day.
Nice. Got it.
So that's how we service all the dealerships in Lower Mainland or in Alberta now. And I believe this service will be very welcome in Ontario as well, because no one doing that in the international students or people with limited credit.
Correct. Okay, I get it. That makes sense. Thank you. Appreciate that.
No problem. And one more thing is
you're not, I mean, that's not a barrier though. I mean, if somebody did have good credit, this model still would work.
Yes, and I'm trying to say that because lots of people in Vancouver or in Toronto, they're mostly they own their homes, right? And they may have multiple assets in the real estate, right? And they don't want to max out their credit in terms of the mortgages, right? So they tend to use our service because we don't report it to the Equifax, and that helps a little bit in their cash flow statement, right?
Yeah, this
Yeah,
is
exactly. And they don't
love
care
it.
about they don't care about it being on Equifax. Like, who cares?
No one, just the lenders cares.
Yeah, just
The
the lender.
lenders care, yeah.
Yeah,
So we're kind of working with the dealership and the retail customers that to get around with the scrutiny from the typical traditional lending banks, right?
Right.
I have a quick question. So do you have it down to by model what you make annually on a vehicle?
Yeah.
Oh, yes, absolutely. So we we will still offer to the low end vehicles, but with a super low residuals. So mostly it won't work in a price range under 80 grand or 70 grand. Doesn't seem the tax taking advantage of the tax and payments that don't really help. But vehicles over 80 grand, they start kicking in this program.
Does this have a high down payment?
We require around 25%. So if a student comes in want a Cayenne at 100 grand, we will get 25 grand down. So we actually land writing a check for $75,000 on a $100,000 car.
We also take a refundable deposit.
At around 5%.
A 5% refundable deposit, and that's actually a nice placeholder because that allows them to keep that in place and move the vehicle. You know, if they want to cash, move from one vehicle to another, they just keep the deposit down, and the deposit is a little bit of additional security at the end of the day. And it's back to the, most lending groups use your credit score as a stick. We put a GPS in the car, right? We specialize in specific vehicles that we know will really preserve their value. So in worst case scenario, we just get the asset back. Being punitive with the person's credit rating is of no value to us. So our clientele sees that as also, it's a good partnership with them. Is we don't need to hit their credit rating. Let's just look after the vehicle. If they want to move it around, and we're even proactive, like, hey, if you can't afford this, do not panic. Just let us know, and we'll
get you a different one. We'll get you a different car.
Exactly.
Yeah. So I want to talk to you. I have an opportunity here in where I am in St. Louis. That if you're interested in doing something north or south of the border, I have a guy. He's put $1 million into it already. So we should talk.
Yeah, well, we'll talk next week for sure.
Right? No problem.
It's good. We do boats too.
Yeah.
A few boats in the portfolio now.
You do boats as well?
Yes, right here.
Oh, dude. So we're right down here I'm right here by the Lake of the Ozarks, which is like, Party Central, the Cove. What happens in the Cove stays in the Cove.
It's good.
Any other questions?
No, I'm good. I love it.
We good?
Cool. I think we're good for time. Thank you very much for everyone's time this morning, and look forward to following up. Dave and Lyle, thanks for your questions.
And we can forward this master deck to you guys. I believe Mark has it.
Yeah, that'd be good.
It'd be awesome.
Good. And so I think we'll do like a 10-minute kind of debrief on our end, guys. So maybe we'll just ask you to step off, Sean and Brian, and we'll just chat with the guys.
Sounds good.
And then we'll set the recording and everything. So yeah, Dave, you can stick on if you want. Lyle.
Great. Thanks again, everybody.